Okay, it looks like that went pretty seamlessly, so we are now live. Hello and welcome to anyone joining us just a few minutes early. My name is Charlotte. I'll be your Money Show host for this session. Welcome to our first virtual expo of 2026. I hope everyone's having a wonderful morning so far and looking forward to a day full of great sessions with us and our experts. The session that is starting soon will begin on time in just a few minutes now at 10:40 a.m. That's Eastern time. And I do have Mike Larson, our editor-in-chief, and David Gardner, co-founder of Motley, here with me in the Zoom room. They're excited to begin their session. So once again, to anyone just joining now, we will be getting started on time in just a few minutes here. I hope you're having a lovely morning. Looking forward to starting the day with you. Hello again, everyone. Welcome to those just joining. The next session will begin on time in just a couple of minutes now at 10:40 a.m. Eastern time. Thank you all for your patience. Looking forward to it. Good morning, everyone, and welcome to this Money Show Virtual Expo. This morning, I am joined by Mike Larson, Money Show's editor-in-chief, and David Gardner, the co-founder and chief rule breaker at the Motley Fool. Now, to our live viewers, please share any questions in the chat box, and time permitting, we'll do our best to get those answered for you at the end. And with that said, Mike and David, I will hand the mic on over to you, also relinquishing my screen share so everyone can see your beautiful faces. I hope that everyone enjoys this session.
Wonderful. Thank you so much, Charlotte. And thank you to everyone who's watching there, home, office, wherever you may be. Hopefully you're someplace cozy. It's been pretty cold out there for most of the Eastern U.S. This is the Portfolio Review Virtual Expo, our first event in 2026. We're really excited because it is a new year, which naturally means it's a great time to find new investments and new strategies for your portfolio. We're going to have 2 full days essentially of expert guidance. We're going to cover stocks, bonds, commodities, real estate, a little bit of everything, and give you some updated guidance from the experts on what they're seeing in the markets here at the start of Q1 and what you can prepare for as we roll later into the year. With that, I do want to say that I'm extremely excited to have one of the pioneers of the individual investor education movement with me here for this opening session. David is the co-founder and chief rule breaker at the Motley Fool, as well as chairman of the Motley Fool Foundation. He has 28 years of stock picking experience, has achieved some remarkable results, generating 21% annualized returns for followers of the Motley Fool's flagship service, Stock Advisor. Is a Morehead Cain Scholar graduate, as well as the recipient of the Distinguished Young Alumni Award from the University of North Carolina, and is the author of the new book, Rule Breaker Investing: How to Pick the Best Stocks of the Future and Build Lasting Wealth. David, welcome to the Expo.
Thank you very much, Mike, and great to see everybody here this snowy morning.
Yeah, absolutely. It's funny. We were talking before we launched. You're there in the DC area, which is certainly colder than usual, more snow than usual. Here in Florida, it is in the 30s at night, which I don't know why that is the case. I moved here for a little bit more warmth, but it is what it is. In any event, I'm sure everyone watching is familiar with the Motley Fool name, but they may not really know about your company's really intriguing origin story. So I was wondering, as we get started, why don't you walk them through, how you and your brother Tom founded the company and how it has evolved since then, all the way back in the early 1990s.
Sure, Mike. Well, thank you. And, I would say that we started with very good timing because we didn't know the World Wide Web was about to be born. We were using AOL back in the day. Online services were an interest of ours just coming out of college. And we'd been raised as investors by a dad who taught us about the stock market. From early days, he said, buy and hold, find great companies, very Buffett-like advice. And so we, as young 20-somethings, were doing that. And then all of a sudden we realized, oh my gosh, it's going to be so much better for investors because investment research for us back in the day, Mike, was, you may remember this too, you had to dial up the 1-800 number to get the investor relations of the company you were researching, and then they would mail you the annual report from maybe 8 months ago. And that was investor education and research back in the day. It took a while, wasn't very efficient. And then all of a sudden the internet shows up and we realized there are real-time stock quotes. You can trade information with people on forums and discussion boards. You can learn so much more, so much faster about the world at large. And so from early standing point, keyword fool on AOL, America Online was right in the Washington, D.C. area, which is where I live today, where it snowed this past weekend. We just began to build out a community of people who loved investing. And eventually we started realizing, oh my gosh, we can hire people. And we became a company. And here we are now in our 4th decade. We've loved it through markets ups and downs. I mean, certainly 2001 hurt a lot of investors' portfolios, mine too, 2008, 9, and at different points, COVID, et cetera. But what we've basically been trying to practice and teach the world is to play the long game in a world where many, many people, most of them institutional traders, are playing the short game. And and by that, I don't mean that they're shorting things, although they do that too. I mean that they're very short term. And so we've been really well rewarded for finding companies, great companies like Amazon and Nvidia early and holding them way longer than most people ever do and making a lot of money with our members since.
Yeah, let's talk about the investor education world. I mean, again, when you started in the early 90s, the marketplace, the backdrop for individual investors was entirely different. What are some of the challenges that today's individual investor faces, and maybe some of the tools and opportunities they have available to them now that they didn't back when the Fool started?
Yeah, I think, Mike, a lot of us have exposure to far more information than we can ever use or process. And a lot of it is also extremely ephemeral, very short-term oriented. And so I think the biggest struggle for most people trying to learn investing today is what is investing? What really is investing? And for me, it is putting the clothes on and wearing them like the sports team home jersey of the coming Super Bowl teams. When people go to the Super Bowl stadium, they'll have their home jersey on. And that goes right to the root of the word investing. The Latin root is to put on the clothes, to wear the clothes, like priestly vestments is the same root. So I think that's what we should be doing with our money. But we are definitely living in a world increasingly where everything is sped up and you think that you need to act or know what's happening right now this morning. Mike, how's your portfolio doing so far this morning? And I really don't think that that is helpful for most people trying to learn investing. There are also a lot of opportunities, cryptocurrency, other things that didn't exist 30 or 100 years ago. And while that's attractive, and I think being a kid in a candy store and having lots of options is good, I also think it can be too much. So I like to focus on common stocks and uncommon profits, as the great writer once titled his book. And that remains to me the easiest, best way to long-term prosperity, which is what we're shooting for at the Motley Fool.
Got it. Well, I want to dive into some of the things you have in your book in a minute, but there are a couple of things I have to ask about because they've been things that have come up at our conferences, things that have come up in sort of the individual investor world today. One of which is social investing. It seems like it's become so much more popular. Investors will bounce ideas off each other in Discord chats and trading rooms and on X and things like that. Thoughts on that? Is that a good way for people to learn? Are there any pitfalls that you think people need to be aware of?
So I think that's a really great thing. Of course, net, it's a huge gain. I talked earlier about how investor research a few decades ago was ponderously looking over the annual report that somebody had mailed you. So yes, of course, I think it's fantastic. Investment clubs, for example, which have been around a long time, it's a great example of social investing. So, and the Money Show, I mean, what you're doing these 2 days, that's also social investing. We're learning from each other. We're coming together, we're cohering. And so I think that's always going to be good. Now, of course, if you have somebody who's a toxic influence in your life, an older person who you learn to trade from, and they're not doing so great if they actually did the math on their performance and you're mimicking them, then that's not great. Or if you're getting fake news or bad information from people, either in the media or around the water cooler at the office, if you still go to an office, then that is obviously can be a problem. But for the most part, trusting your sources and trying to learn as much as you can. I think you're over-indexed. Our audience today, these next couple of days, are great examples of people who recognize the benefit of social investing.
Got it. One other trend I think I have to ask about is some of these sort of gaming adjacent things that are available to individual investors, prediction markets, right in their own trading app, for example. What are your thoughts on that? I mean, is this positive? Is it negative? Is there somebody who wants to get into that world versus the traditional financial markets? What do they need to know?
Well, first of all, I love prediction markets just in their pure form. I think it's really cool to make guesses together and then track it and then see what the wisdom of the crowd thinks. So I think that's a great feature and discipline. But when we start getting into betting, and I love sports too, but let's just stick with sports betting for a quick sec, Mike. That is a horrendous misuse of anybody's capital. In the same way that buying lottery tickets is as well. Yes, you might win. But of course, the odds are against you. Just like any casino, the house is making money, people are not. And the reason sports betting and other forms of prediction market betting don't make much sense to me is because it's a 50-50 proposition most of the time. Mike, you won, I lost, and the house gets its 5 to 10%. And if we just play that forward another 100 times, you see your expected rate of return is less than 0%. You're a negative expected return rate. Almost anybody who bets on sports on a regular basis is losing money, even if they don't convey that to you. So similarly, while I love prediction markets, taking a 50-50 bet, an over-under, and then giving 10% of the house every time is mathematical lunacy. And so I would always be calling that out, as I did in my book, Rule Breaker Investing, which is about stocks. But I spent about a page and a half explaining why sports betting, which is obviously very popular, very au courant, sounds attractive, sounds sexy, prediction market betting is a really bad decision for anybody in your life, including yourself, if you're spending too much money there.
Got it. Well, let's start talking about rule breaker investing. I mean, it was released late last year. I want to first talk about where the idea for this book came from. What motivated you to write it?
So I think for me, it was realizing that I would want to write one final book about the stock market. And this was going to be it. And after 3 decades of beating the market, which I do want to call out, I'm not trying to brag here, but I want to underline that because I do believe we've been raised in a society today where most people are told it would be luck to beat the market. You should just index because it's blind monkeys throwing darts at a dartboard. They have a better shot at beating the market than you do. I completely disagree with that. I bet a lot of our audience does as well. But let's face it, that is the conventional wisdom today. So as a fool, I like to call out conventional wisdom. And so for me, that's the heart of why I wrote the book in the first place. You can beat the market. And by the way, it's not that hard if you just play the game differently than you hear it reported on CNBC. So for people jumping in, jumping out, trading, I don't think they have a great shot at beating the market, just like people betting on a lot of sports. But if you find great companies, and I've done this for Motley Fool members, I now have 7 stocks that have risen 100 times or more over the course of our 30 years of running services, starting with Amazon, going right through to NVIDIA. These are companies that we continue actively to hold, and we have very low cost bases. Thanks to the miracle of stock splits, Mike Larson, I have a 16-cent cost basis in Amazon, and I have a 16-cent cost basis in NVIDIA. It's the same cost basis, and that's not even mine. That's for our members.
Yeah.
And so I just want people to know that this is the way toward true wealth, using the stock market in the proper way it was built, which is to play the long game and be part owners of great companies. So that's breaking the rules. So that's rule breaker investing.
Got it. Well, let's start. The book is broken down into 3 parts, and the first is focused on habits of a rule breaker investor. Can you share a few details of what you cover there, including what you mean when you talk about conscious capitalism?
Sure. Thank you. So first of all, I started the book with not stocks and stock picks, even though that's what most people expect from a session like this or a book like mine. But I realized, it's one thing to say, hey, buy NVIDIA or buy Amazon. But if that person trades out of it 6 months later, that's not great advice for them. So what I realized is we really need to lay down habits for people to follow. And so for the rule breaker investor, I introduced 6 habits, and we put all those in before you even start talking about ticker symbols. And we're not going to go over them right now, all of them, unless you want to. But the first one is probably the most important, and that's rule number 1, let your winners run high. And I was raised by a family where we held stocks for decades. And you can really, really raise your level of prosperity in this world if you find great companies at low cost bases and you do what most people don't do, which you hold them. You hold them through thick and thin. Netflix has been a phenomenal performer, up 600 times in value for me, and yet it's been cut in half 3 or 4 or 5 times since 2004 when we first recommended it to members. So over 20 years, you're going to watch even the greatest stocks get cut in half multiple times. Are you willing habitually to sit there and take it? And I think that's really important. So that's a very rule breakery thought. That you also asked about conscious capitalism. That's habit number 4 of the rule breaker investor. And that is to follow the 4 tenets of conscious capitalism. And again, we don't want to spend too much time because it's a short session. So I'll just say, first of all, Google conscious capitalism if you've not heard the phrase before. But it is a theory that you can do well by doing good in this world. And most of the great companies are doing good. Amazon has saved many lives and many hours over the course of its e-commerce dominance over the course of 3 decades now. It's a great, great business. Chick-fil-A is an amazing, good business to work for, and I wish it were a public company. It's not. So many of the best companies, Patagonia, Apple, these are great, good things for our world. So we love finding those companies and following the tenets, especially purpose-driven companies and companies that are winning for everybody, not just their customers or employees, but also shareholders, the environment, and their local communities. So win, win, win is the heart of conscious capitalism. One of the habits I want people to start.
Perfect. And as a reminder, just Charlotte mentioned it at the outset, but if you do have any questions, do feel free to type them into the chat window. I'll make sure I can bring them up so David can address them. I do want to talk about sort of the second part of your book next, which was, the 6 traits of the rule breaker stock. What is that briefly, and why do you think investors need to focus on names that meet your criteria there?
Sure. So I'm going to just underline 2 of the 6 traits, the first and the 6th. Let's do it real quick. The first one is that we're looking for top dogs and first movers in important emerging industries. So if you're looking to beat the market, then your best shot playing the long game is to find the world shapers, the world beaters, the early emergent companies. I've already mentioned several of them: Amazon, Nvidia, Netflix. How about Tesla, which comes along when people are like, electric cars will never work, right? Top dog and first mover in important emerging industries, not just any industry, Mike, important ones. So I love to find the tech leaders. I think if you're not the lead husky, the view never changes. So I love to find the lead huskies in important dynamic emerging technologies. So that's number one. And that really, if you just fish in that stocked pond over the course of your investing life, you will find the great companies of your time. And if you buy them early and keep holding, even through downdrafts, you will be rich. And so that is the first and most important trait that we look for in stocks. The sixth, skipping forward to the final one, is my secret sauce. Because the sixth is that the stock generally be regarded as overvalued. When I first recommended Intuitive Surgical, which is the worldwide leader in robot-assisted surgery today, in 2005, it was trading at 71 times earnings. And many people would say things like, I would never buy a stock trading at a PE ratio of 71. And it was so overvalued. And Tesla has always been so overvalued. Amazon, of course, would never make money. It was so overvalued. And while I initially thought, this is very anti-conventional of me to buy these companies, to recommend them to members, I've since realized why it works. And to give it short shrift here, but still speak it out, my truth is that most of the great things that lead to great companies are not measured by numbers. And so when people look for numbers and see a PE ratio of 71, they don't see who the CEO is. What is the value, Mike, of Jeff Bezos to Amazon or Elon Musk to Tesla? There is no number on the financial statements for those men. There are also CEOs who subtract value. Many undervalued stocks look undervalued, but the market's smarter than that. They see, we got somebody who's not a great CEO of this company, I wouldn't buy it, right? So that is one example of there are no numbers for the things that matter most. I'll give another quick example. In addition to who's running the company, how about the brand of the company? The brand and reputation. These things are very valuable and important. Apple has the most valuable brand in the world and is also just about the largest company in the world. Those things are correlated, but there is no measure, again, on the financial statements for brand. So we've already talked about the CEO and the brand, and no one is scoring those. Therefore, all the companies that are great with great CEOs and great brands look, in quotes, overvalued. And people say, I would never touch that stock. It's way overvalued. So that is the secret sauce of rule breaker investing. There are, of course, 4 other traits that I look for as well that I think are all very important, but that's the first and the sixth.
Got it. One last thing I talk about in the third part of the book, I'd want to ask, you talk about the 6 principles of the rule breaker portfolio overall, and you had an interesting title there. You said investors should make their portfolio reflect their best vision for the future. Why and how does that apply in this world?
Yeah, I think that your money should be a direct expression of yourself, your values, and what you believe and what you're looking for. I don't think it should be a bunch of stocks or holdings that somebody else recommended to you and you really don't know much about them. So I often, since I'm an English major, I often liken this to our books on our shelves. If I were to go to Mike Larson's house for a happy hour, you're out getting me a cocktail and I'm looking over your books, I can get to know you pretty well by seeing the books on your shelf. Our books are our friends. I think the same should be true of anybody's brokerage statement. I should be able to look up and down what your holdings and go, okay, I see kind of what that person's interested in the world. And I contend with high confidence that not only will you feel better about your investing and learn more and enjoy it more if you have filled your portfolio with things that you like or love and that you're interested in, I also contend that you will do better. You will flat out outperform the version of yourself that wasn't investing that way. So yes, make your portfolio reflect your best vision for our future. That is the first principle of the rule breaker investor. And I want that to be true of everybody. And obviously not everybody feels confident enough or knows enough stocks or feels like they could fill out a fully diversified portfolio with things that they understand. But intellectual curiosity should be a flame that burns your whole life, and studying and learning, what is this whole AI thing? And what about the coming age of robotics? The people who are going to do best as investors are those who are asking and answering those questions, even as an English major.
Got it. Well, I mean, you've thrown some ideas out there that I guess are stocks you like for the long term. People obviously looking for actionable ideas if they have anything. Is there anything else you haven't mentioned here so far that you think is probably worth sharing in this market environment that could work for someone?
Yeah, I mean, I think that for the most part, you should just be dollar cost averaging constantly. If you're a wage earner, many are. I hope every 2 weeks you're saving 5 to 10% of your portfolio, and I hope every 2 weeks you are investing that. Pay yourself first. And I don't care whether the market's high or low. Every year I predict the market will be up this year. That is my prediction for 2026. Here's the trick. I don't know, but the market rises 2 years out of every three. Therefore, I'm one of the higher rated market timers in the world because I just say the same thing every year and I'm right most of the time. And that's especially in the face of people saying, especially before 2025 began last year, a lot of people said market's going down. Market is high, it is going down. So I don't listen to that talk. What I do and what I advise everyone to do is to invest early and often and constantly over the course of your life. Don't jump in, jump out. Don't get afraid of things. Fear drives too much on the market. The market rises over time. It rises 9 to 10% annualized. That's a small miracle. Make sure you get early in on that train, the earliest depot you can, and stay on that train your whole life long. You will do so much better than the people who are worried about the market, guessing, jumping in, jumping out. And so, yeah, those are just some more general thoughts about how to approach the market. Of course, there are hundreds of companies that I think are worthy of your portfolio. And I've already mentioned a bunch of them. I generally like the same companies over and over. Like I think Netflix a pretty good buy right now. With it's down about a third from its high just last summer. So that would be an example of maybe a bounce back stock. But I mean, I have just held Nvidia for 20 plus years now, and it's just been always the right answer. Like, what's the stock we should be buying today? It continues to be Nvidia 20 years later. But many others besides. Duolingo, a completely different kind of a company, a smaller cap company. I think that's a good example of a rule breaker. I also want to say, Mike, right away, that any stock pick I mention could well be a loser. And that's an important part of what I'm saying all the time as a fool, is that I'm comfortable with losing. I never load it up on one stock or say this is the one. I'm broadly diversified and I'm willing to be wrong like a venture capitalist. I know most of my big winners are going to carry my portfolio. I'll have a lot of losers besides. That is rule breaker investing, which, not everybody needs to do. This is the book, and I am a rule breaker. But I'm not here saying this is the only way to invest or this is the way everybody in the money show should invest. But I do owe it to the world near the end of my investment life to say this has worked wonderfully. I believe it will continue to work wonderfully in part because it's very contrary to how the conventional wisdom often plays the game.
Got it. And, I just given everything that's going on out there in the world and the markets and the headlines that people are saying, I do have to ask, what is your advice for an investor who's seeing the political stuff, the geopolitical things that are being thrown at us every day? How do you as an investor sort of cope with that and separate it if you need to from what you're doing in your portfolio?
It's very much on our minds, and I'm glad you asked it. And I would just say that my answer is the same in 2026 as it was in 2025 or 2001 or any other period, 2008, 09, GFC. I truly believe that you will be best rewarded by investing for your whole life and thinking more about your individual companies that you're a part owner of than whatever the geopolitical a strategy or environment suggests right now. There's a great line that I quote in Rule Breaker Investing, which is basically anybody's macro view is worth nothing at all, including my own. And that line comes from Warren Buffett. I truly believe for most of us, we should think of ourselves as trying to find the best companies of our time and being part owners and not worrying about political instability, which is out there right now. And it's very regrettable for me anyway, I'm sure for many of us. And yet I'd also say that we forget the good news. Amazing stat came out, you may have seen it a week ago, that last year, 2025, with a 20% drop in the nationwide homicide rate, became the lowest homicide rate in American history, at least going back to 1900. Many people don't know that. They think it's really dangerous out there and watch out for your kids and all the rest. It's not true. The world is a lot safer and a lot happier than you'd see in the headlines. Remember, headlines are geared to get you to click, get you to worry, get you to to jump in and jump out of the market, financial headlines. And I don't do that. I'm a believer. Never bet against America. Warren Buffett said, I agree. And I continue to be wildly rewarded finding great companies like Intuitive Surgical, Apple, Tesla, NVIDIA, Booking. All of these are 100+ baggers for me because I was willing to buy and hold greatness. And I think that's going to work just as well right now as it did last year or 33 years ago when we started the Motley Fool.
Yeah. Well, we still have a couple of minutes left. I'll keep an eye out to see if Charlotte sends any other questions my way. But one thing that I wanted to bring up, since you mentioned it earlier briefly, was other parts of the market that are not your traditional equities, cryptocurrencies people are interested in. Obviously, in the last year, precious metals have taken a lot of the spotlight. What are your thoughts on those parts of the market that don't fit into sort of the traditional, equity analysis that you're talking about? And what do people need to know if they want to get involved there?
Yeah, well, I would say, first of all, intellectual curiosity may well lead you to ask interesting questions about those things. And I would always encourage anybody to follow their whimsy, where their nose takes them. So I think it's great to learn more and more about the world and piece it together. For me, I have never found myself interested in precious metals. Maybe I was influenced by Jeremy Siegel, whose book Stocks for the Long Run pointed out that gold really has not been a value creator for a few centuries. It comes and goes. I realize it's at all-time highs today, but if you look at the inflation-adjusted returns of precious metals over any long-term period, you get crushed by stocks. And that makes sense to me because stocks represent real companies creating real value, delivering the products and services we use every day to the world at large. Precious metals are just a form of storing value, and it's very conservative. So it looks sexy, it looks attractive, not very interested in it. I kind of feel the same about cryptocurrency. I've never really owned it. I'm not personally interested in it, but I'm not here to dissuade anybody from thinking it's worth studying. But as I study these things, I don't find myself particularly interested. Maybe it's because I'm such a junkie for-profit public companies, especially American ones, because we have the best economy in the world for really important reasons, like you can start businesses here. People appreciate business. There are, aspects of our society that could be better. Portions of Starbucks have unionized against it, which I think is sad, but maybe deserved. I'm not really sure, but I'll say this. Never bet against America, and look at the great companies of our world today. Most of them are American brands, and that's for very good reasons. I'm going to continue to be investing in great companies. I'm not a chauvinist in any traditional sense. That is, I'm not just here to pump up my own country. I love some of my foreign holdings. I want every company, including China, companies in China, I want them all to be awesome and to add value to my life and yours as consumers and to the world at large as businesses. And so I'm always on the hunt for more great common stocks. But Mike, I don't find myself that interested in going outside that sphere, but I totally respect people who love fixed income or find themselves fascinated by the blockchain or any other aspect of coming possibilities. I did, though, speak earlier against 50-50 bets where you have a coin flip chance of winning and you're both going to pay 5 to 10% to the person who furnished you the coin. I know who's making the coin out there, and it's not you and me flipping coins. It's the people providing the coins that we're randomly flipping to see who wins that Super Bowl bet. It's a huge misuse of money. I think something like $60 billion was spent on gambling last year in the United States of America, and just an incredible waste and sad waste of money at an individual level.
David, I did have a question come through here from GS Castleman. It says, holding good companies forever can be great if you don't need income. What do you suggest as strong candidates for income?
Yeah. Well, let me just say, you're right, GS Castleman. And often I am speaking to people who are not in need of income. I'm probably speaking to people in the middle of their lives or people just starting portfolios, et cetera. And I very explicitly in my book, I say, I'm not here to provide an answer for everybody. I, of course, do appreciate my dividend paying stocks. And that would be for me as I start at the age of 59, as I start to rotate my portfolio in the coming decades, I can imagine setting myself up for more good dividend payers. But it would be companies not just with the highest yields, but companies that are doing the highest good in the most impactful way in our society. Those are the ones who are the most dependable dividend payers. The dividend aristocrats who raise their dividends over time are usually companies that are efflorescent, that are growth oriented and happen to pay a dividend too. By the way, we started seeing some big tech dogs start paying some dividends. So those who've owned a company like Alphabet over time, in time, sometimes begin to see dividends. And I think that'll be true of some of the great companies that look like non-dividend growth payers today, as they age, they start to pay dividends. But that's not an intentional strategy. If you're somebody who's specifically looking for income, I realize a lot of Money Show attendees are. I would say, hey, move a percentage of your portfolio into fixed income, into things that pay regular dividends or interest. I'm a big fan of that. I would just say for me, I try to minimize the amount that I put there because I know, along with Peter Lynch, that when the market rises 9 to 10% annualized, if you were just to sell off a portion of your portfolio over time to raise income, again, this is not a base financial strategy that you'll get from most financial planners, but it certainly is true that if you are well invested in great growth companies, you can sell off portions of that over time to generate your income, as opposed to having to go, oh, it's all fixed income now for me. But we're all different, and it doesn't make sense. What Peter does doesn't make sense for Paul or Jane. I think we all have to get to know ourselves, our own mentalities, our timelines, our risk profiles. We need to make decisions on portfolios based on us, not based on what some fool says at a Money Show session. So I think it's a great question, and I would encourage everybody to get in touch with a financial planner on what makes most sense for them.
Well, David, this has been a wonderfully interesting and enlightening conversation. Unfortunately, the clock is always ticking, and I know we have to have a few other speakers following you for the rest of the day. I want to personally thank you for joining us here. Anybody listening or watching again, David's new book is called Rule Breaker Investing: How to Pick the Best Stocks of the Future and Build Lasting Wealth. I'd highly encourage you to check it out, read it cover to cover, and put some of those principles to work in your own portfolio. So again, David, thank you so much.
Thank you very much, Mike, and everybody, Fool on.
All right. Thank you both for joining us. And to those who are watching live, be sure to stay tuned as we have a lot more in store for you today in this Money Show Virtual Expo. I hope you have a